What do you make of the futures higher, but just kind of falling well off their highs over the last half an hour or so?
So, look, I think that there was definitely a sigh of relief, particularly with Powell's comments. You know, the idea that, yes, the odds of a recession are going up and that inflation pressures are certainly rising. But Powell's comments basically suggested that, you know, that whatever inflation comes off of tariffs would likely be temporary, and that there is no real concern among the Fed that we're going into an extreme recession. Now, all that said, we still aren't out of the woods. If you look at S&P multiples, I think that they've gotten very reasonable. If you take out the Mag 7, which are really being driven by a whole set of, you know, secular stories that I think, you know, we can agree will still remain regardless of what happens in this short cycle, in the cycle that we're in right now. The majority of the S&P 500 is actually really attractive. But as we're going into what is very likely going to be a recession, at least a mild recession, with the potential that it could be worse than that, I think the markets are going to climb the wall of, or if the markets do go up, it'll be climbing the wall of worry all summer.
So, Gina, I'm just going to backtrack a bit. You said sigh of relief. Relief's actually your word of the day.
Yeah.
But then I just want to go to what you just said just a second ago. Do you think we're going into a recession?
You know, I think we're likely going into a recession, at least a mild one, and not for any reasons that have happened in the last few weeks. This has been in the making for, you know, over a year, in the sense that, you know, we have seen consumers at the end of what they can spend, you know, in terms of, you know, credit card spending, in terms of wage growth. There are lots of things that suggest to us that the consumer has been tapped out for a while, and it would take some time to manifest. And I think that time is coming. So I don't think we can avoid that. So the question is it a mild slowdown or is it a recession?
Okay, so if you think that we could be facing either a mild recession or just a full-blown recession, whichever way you're going to look at it, I don't think there's any such thing as a good recession. What areas of the market do you think are attractive in that scenario?
You know, I think that we've been defensive. We've certainly been defensive, and we do care about valuations. And there are a lot of changes that are happening. I think one of the challenges for anyone is that pattern recognition right now is out the window because so many regulations are changing. So, you know, to sort of answer your with a non-answer, I would say that this is a stock pickers market, not sort of a broad sector market. And so, you know, we're looking for things that have attractive valuations and have defensive earnings. But every day we hear new kind of stories about regulations that are changing. That matters. And so I think every stock is going to act. I think we're going to see a lot of dispersion in the last half of the year.
All right. So you mentioned it earlier. I know one part of the market that you're looking at, or actually one way to invest, is the S&P equal weight. Our Mike Santoli pointed out, and I think you're pointing this out too, if you actually subtract the Mag 7 from that, the S&P would actually be, or if you subtract the Mag 7 from the S&P, it would be positive for the year. The equal weight, what do you think it gives you that you just don't get from the regular market cap weighted index?
Well, it simply gives you less exposure to the really, really big Mag 7, who are massive in terms of their impact to the S&P 500. But it also sort of it gives you more exposure to some of the smaller, you know, companies that you might not otherwise get exposure to in the S&P 500.
Okay.
In a market like this, like I said, there's going to be a lot of dispersion, so it's going to be really, really hard to invest broadly.